Hello, entrepreneurs. This is part 2 of 3. I initially thought I was only just going to do 2 modules in this series, but I think I'm going to end up with 3 because the presentation ended up being too long. So bear with me in building these principles when it comes to designing your own management accounts. So I'm going to just share with you the presentation, and please also note you can download the presentation on the YouTube account, but also if you are one of our partners who are enrolled in a program, make sure that you get the full material and the presentation. Okay, so we're gonna actually take the update. Remember, this is part 2. You should actually start with part 1, which I'm gonna load up. But in this component, we're only just gonna focus on what is management accounts and why we need management accounts, and where does it fit within accounts, where does it fit within finance. And we will also be looking at the management accounts when it comes to the principles, and also focusing on why those principles are important. And the last one is the steps. There is a video that I've done where I've just only focused on the steps in building this. So I will move pretty fast on that. And then the conclusion. And then the next video will be focusing on the practical of the steps that I have mentioned. So what is management accounts? It's basically management and accounting. That's all it is. So I think sometimes because as entrepreneurs, we think we kind of, when it comes to finance, we start feeling as though accountants were there to just get you confused. So no, the management accounts are designed by managers who want to make sure that the information that they are getting from the accounting makes sense to them, but also they can make informed decisions. So in essence, management accounting is more about presenting the information that has been collected so that you can make decisions, you can plan, you can actually also control the things that are happening in your business. Okay, so, and as I said, it's about collecting information, analyzing it, and communicating that information to make sure though when you are going through it, it's very much aligned to what decisions you have to make and what information do you need to make sure that you are able to make the best decision at the time based on the information available. I think in essence, we also have to understand that within accounting, we have 4 sisters. So cost accounting, management accounting, tax accounting, and financial accounting, which I had covered in more detail in video number 1. This part now, we're basically looking at, it's another type of accounting. You see, cost accounting is generally will be used also by managers, but in making sure that they're managing the cost. Whereas management accounting is really looking at everything in the business, making sure that the performance and position is actually managed. Whereas tax accounting is very much focused on complying with the legislation, and financial accounting focusing mainly on how we actually report financial information for external use. So management accounting is very much for internal use. There are instances where certain people will ask you for management accounts, even though they are external individuals. That would be because maybe they want a certain detail of information. So just remember also that when we are managing finance, or when we are dealing with finance, we're only dealing with 4 things: income, expenditure, asset, and debt, which all that relates to income statement, balance sheet, and positioning. I do have a video that I will actually create that is actually learning or understanding how financial statements work. but it's just 4 things. Don't get overwhelmed by it. Nothing else. I know accountants sometimes tend to complicate things. We definitely tend to complicate things. So simply way, that's all you need to know for now. Okay, in designing your management accounts, as I said, is a tool for management to achieve better results, better control, and better planning. There are several accountants in terms of profession. There's CIMA, there's ICM, there's ICWAI. There's a whole list of them that are specialists in this. I personally am not a management accountant, but I'm more a CPA or a CA. CPA in the US, that's what they call them. But in South Africa, we call them chartered accountants. So, but the skill set that management accountants have can actually also be transmitted to general financial accountant. So you just need to make sure when you are approaching a financial accountant or a management accountant, make sure that they actually have both skills, management accounting and financial accounting. They are not the same, but they each can actually have the competencies. Now, when it comes to the objectives and the aim, why do we need to have, what's the reason you wanna make sure that you have set up the right management accounts? Because you wanna make important decisions. You wanna make a decision as to whether to drop a product or not to drop, whether to close a division, whether to continue with a specific project. So management accountants is about providing information to make decisions, but also it's about planning the future of the business activities, prioritizing it. And it's also about evaluating and monitoring the performance. It's mainly used to help management also to safeguard the asset and make sure that the assets are properly being used. The analysis can range. It can be variance analysis, it can be cost volume profit analysis, it can be a whole list, which I will cover just shortly. So, as I said, management accounting, it basically really look at the management functions. It's about ethics, how they prepare this financial statement is based on certain principle, which is business ethics. In the first video, I specified that the first step in establishing the right accounting function is to get competent people and people that are honest. And that is why this is also embedded in this. So we analyze in cost management costing, we look at product versus period cost, manufacturing cost, we analyze the position, as I said, but also the performance, but we also look at the trends that are happening and practices that can improve on how we're managing that business. So where does it fit when it comes to finance in terms of the finance function? It's basically fit in between performance and evaluation analysis, plus also in planning and decision support. So in your business, you should not be making any decision, not unless you know what's the current status quo of that thing and how am I going to manage it and what influence that item in your books before you actually make a decision. And some decision may be buy, are you going to buy or make something or rent something, or are you going to outsource or are you going to keep that in-source? And all those decisions are made by analyzing the data. Recently, I was reviewing the financial statements of one of the entity that I'm a non-executive in. And as I was highlighting and going through the accounts, it was very clear that they have outsourced legal services, but they were spending close to 500,000 average over 6 months. And I'm like saying in my head, it's an indication that the business needs it. However, also the business model that should not be outsourced. They should have an in-house person, but also we need to figure out what are the foundation of setting this up, but then how to then reduce the cost. So really, decision support is not just about big decision. It could be just analyzing the actual cost drivers within the business, but then seeing what can work, but also testing your business model. Is the business model talking to what we can afford? Is the business model justifying how we're actually spending the money in that area? So in essence, the key roles of the management accounting is forecasting, planning, budgeting, performance analysis, problem solving, cost accounting, and also cause and effect, including decision making. So I want to just express on the cause and effect. You see, when you're doing the variance analysis, you want to understand, why did this amount move? Why is no longer being spent according to the budget? And what informed that? And what decisions were made? Does that mean that the assumptions we have set at the beginning is no longer the same? So those are the things you're going to need to keep in mind. Now, let's talk about the principles of accounting, management accounting. It's about communication. It's about having an insight into the figures to be able to influence better decision about strategy and execution in all levels, whether it's operational, or is it at the function level, or is it at the product level, or is it at the project level? However, that information must also be relevant. It must help the organization to plan, to source the required information. Therefore, which means the information must help to map up the tactics, but also help to measure if the direction you are taking is actually talking to the goal. The other principle is making sure that the information that is being collected, and whether that is a non-financial information or it's really quantitative, is about also making sure that it builds a trust. It's reliable. You as you are creating these systems and processes to make sure that that information can be trusted. And the last part about the principle of management accounts, it has to be about, it must add a value, the impact, the scenarios, the cause and effect, which affect what. So the decisions that we make, what are the implications? What had influenced that implication? These things are correlated. You can't analyze, for example, I will make an example, analyze I'll make an example on labor cost. You can't analyze a labor cost without understanding the contract behind the labor arrangement, without understanding also what's the model. Do we have contract? Do we have employment type of labor cost? And what then that influence that? Are we managing hours or are we managing output? So you really have to have an understanding of how the business is running to then be able to provide different scenarios to make sure that that information that is analyzed is also showing direct and indirect impact. So I hope also you're gonna need to understand that management accounting is just not about the figures. It's more than the figures. It's about managing the business opportunity. It's about looking at the best practice. It's dynamic. It looks forward. It doesn't just look at historical information, but also is driven by strategy. So what are the steps that you're going to need to take to actually build this? Step number one, as I said, there's a video that I've done. Step number one, though, you have to set the goals and the targets. In those targets, make sure that there's key performance indicators. And as I had already mentioned, in finance, we have how many? Only 4 elements. So start with 4 elements at the beginning, and then over time, you can build it up. So your purpose, your goal, your objective, and the metrics. Always be very clear. You choose the metrics, which is going to be your KPIs, that matters the most. And then step number 2 is to make sure, so this is just an example of some of the indicators when it comes to finance. Step number 2 is about looking at what are the things that you're going to need to do daily, weekly, monthly, and quarterly. So take that goal, break it down into manageable items to achieve that goal, which basically means when you have done that, you kind of almost set certain milestone on the steps on how you're gonna actually achieve the goals, but prioritizing, as I said, what will matter the most on that goal. And you also then have to keep in mind that as you're building this, it must be informed by the trends. It must be informed by how the customer uses the product, but also what's the influence of the supplier to tip the supply and the demand in the industry. In addition to that, also consider the economic cycle. So, for example, if the economy is booming, you are more likely to have products that are luxury because there's lots of money circulating and everyone is using. But if the economy is actually reducing, you will really need to then look at which product are being more in demand. And in most instances, those will be basic needs. So the last step, which is step number 5, is now making sure that the milestones are also set up and work through your charts of accounts. Make sure you don't separate your management accounts to your financial accounting because it feeds into one another. So create management reports that are within the financial reporting. So just get your accountant to assist you with this. You will tell your accountant under asset, what are your priorities? What are you intending to do based on your goals and your strategy? And then on the debt, what is it that you intend to do? Under owners equity and also on retained earnings, what do you intend to do? Revenue and expense. So align it, be very clear. Make sure also when you are setting up on revenue, you categorize the service or you categorize the product so that it's always going to be easier for you to see which product is doing well, which product is not doing so well. And then on expenses, separate, have a direct cost, have an indirect cost, separate items to make sure that you just don't say marketing expenses. No, is that digital? Under digital, which medium was I using? Was it Twitter? Was it YouTube? You gotta need to be more specific. It might actually be useful to set up a separate budget for each. There is I think 2 videos that we have created for budget. So have a look at that also, so that when you are setting this up, we are able also to see, because the step that you're gonna need to do is to make sure that the budget that is being captured is actually aligned to what we have planned. Now, guys, this is the basic foundation still and the principle on how to actually set up the management accounts, but also just understanding that management accounts is basically management accounting principle that are for management to make decisions, but also to drive certain type of performance. I hope you enjoyed this. Just remember to make sure that you leave us the comments and also give us the feedback. I will then do the last video. I promise this is the last one, where I'm gonna take you step by step, where we're gonna start with, we have set the goal. We're going to have an example of a goal that has been set. The milestone has been done. And then the second part will be, now it's on the chart of accounts. And from the chart of accounts, we are now managing it. So I will do that in an Excel spreadsheet. And I hope you will enjoy it. Please leave us the comments if this is helping you to really understand the role of management accounts in your business. Thank you.